Hi, I'm Matt Theriault, CEO of Epic Real Estate, and I just bought this house right here with none of my own money. No credit score, no income statements, no banks, none of that. And I was able to create an infinite ROI too. And this is not the only one of these that I've found recently. So I'll show you how and where I'm finding deals like this, but first I'm gonna show you how I structured this to use none of my own money and create an infinite ROI. Let's go. EpicBreakthrough.com is the creative financing breakthrough real estate investors are looking for. Get started with a list of 21 creative financing terms and deal structure templates to invest in real estate using more of your mind and less of your money. Epic is changing the game. Start now for free at EpicBreakthrough.com. So the seller is in the military and he just received new deployment papers and wasn't too sure how long he was going to be away. And he decided that he'd rather just sell the property instead of trying to manage it from, the other side of the globe. So the house, it's a condo actually in this instance, was in decent condition. It already had a tenant in place paying $1,050 a month in rent. And he didn't want to work with a realtor because he was just a week away or so from deployment and he needed to sell fast if he could. And more on that in a minute. Now, regarding the property, nothing really out of the ordinary here, but when I got to box number 5 of my 9-point seller interview, I asked, if I choose to buy the property, will I need to pay off any taxes, liens, or a mortgage? And that's a good tip right there, by the way. After years of frustration with sellers not being straight about the finances on their properties or downright telling me it's none of my business, instead of asking, how much do you owe on the property, like I used to, I started asking this way. If I choose to buy the property, will I need to pay off any taxes, liens, or a mortgage? I think it works much better because it's not nearly as intrusive, and it almost sounds as if I'm doing them a favor by offering to pay off all of their stuff. Anyway, the seller shared with me there was a $90,000 loan carried back by the previous owner. And this was a first for me. I've never come across a deal until now that already had seller financing in place. And I told him that. And then I asked, I'm just curious, what's the interest rate? And he said there wasn't one. I'm paying the owner $450 a month until it's paid off, he said. So this was a double whammy. But of course, you can't get too excited. You've got to act like you've been there and you've done that, even if you haven't. Finding and talking to a motivated seller that had owner financing in place with principal-only payments is akin to that unicorn in the woods that everyone is always talking about. Nonetheless, I stayed composed and I moved to box 6 on the 9-point seller interview and asked, I'm gonna check the most current market conditions, but do you have an idea as to what properties like yours are selling for? And there's another really good tip there, by the way. Instead of asking a seller what they think their house is worth, like I used to, put the value in the market's hands. As much as you want to, this is not the time to start, flexing your real estate superpowers. This is just an interview. And what you really want is to uncover everything that the seller knows about the property and its value. After all, as much as you think you know the value, you really don't. Nor does a realtor or an appraiser or a bank or the seller. When it comes to a property's value, the market is Lord. It reigns supreme. A house is only worth what someone is willing to pay for it. And that can change from day to day. So by asking the seller if they know what houses like theirs are selling for, you're indirectly positioning the market as the bad guy. You're the good guy. And you're there to help the seller solve their problem. And you will, as long as the market doesn't get in the way. Now, when the seller answered, I could see the dejection in their face because he knew the house wasn't worth much more than what he owed on it. And then I asked, well, what's the lowest price that you might consider? And he stated that he actually needed more than what it's worth. I need $40,000 on top of what I owe, or I'm just gonna keep it, he said. Now, typically, in a low equity situation like this, I'm quickly trying to calculate cash flow, as this could still be a potential subject to deal. If you don't know, a subject to deal is where you take ownership of the property and agree to make the payments on the existing financing while the debt remains in the seller's name. So these are sweet deals when the numbers work out, meaning despite what equity is or isn't in place, when the market rent adequately covers the mortgage payment, it's typically a go for me. Now, that was still important to me, but not nearly as important as what else was going on with this property. You see, I was willing to compromise my minimum cash flow standards a bit if I could take ownership and leave that principal-only seller finance loan that he had, if I could leave that in place. And truthfully, I was a little excited to buy a property subject to seller financing, just to say that I did. So I asked, although the market shows you really don't have enough equity here to walk away with $40,000, I still might be able to get it to you if you're willing to take some money now and the rest later. How much do you need right now? That's my favorite question, by the way, to introduce and start laying the ground for seller financing. Another tip there, try to leave all the real estate investor jargon out of your conversation with sellers and try to put everything in terms of how a fifth grader might be able to understand it. I mean, you're the expert real estate investor. The seller doesn't have a clue as to what you know. So try not to confuse them. Just keep it simple, nice, simple language. But having said that, the fact that this seller bought this house with seller financing, he was a little bit more in the know than most. And so he asked me what I had in mind. So I answered his question with a question. I said, would it work for you if I took over the payments and the maintenance on the property? And then I'll give you $15,000 at closing and then another $15,000 in 2 years. He thought about it for a second and then he countered with 1 year for that second $15,000, of which is what I really wanted anyway. And so we shook hands. And here's how it ended up on paper. Purchase price $120,000. Subject to existing financing. Buyer to pay seller $15,000 cash at closing and $15,000 as follows, $175 per month for 12 months from closing date. Balance due on the 13th month. If you'd like to go deeper in putting together more of these types of creatively financed deals, head over to creativefinancingmasterclass.com and check out what we're doing over there. Now let's calculate the return. The property is rented for $1,050. The mortgage payment is $450. Property taxes are $109. Insurance is $21.24, and there is a $150 monthly HOA fee and a $105 property management fee. Total expenses of $835.42. Subtract that from the $1,050, this leaves me with $214.58. And then I've got to subtract the 12-month seller's second mortgage of $175. And then my monthly cash flow ends up being $39.58. So let's multiply that by 12, and I get an annual net cash flow after debt service of $474.96. Now divide that by the $15,000 I have to bring to the closing table. That's a 3.1% cash on cash return. Now this is a number that definitely does not excite me, but we're not done calculating yet. Remember, these are principal only payments. So there's a significant equity build that's happening underneath everything through the amortization of the loan. So my combined mortgage payments add up to $625. You multiply that by 12 and I get a nice even number of $7,500. Now divide that by the $15,000 that I'm putting down and I get a 50% return. Now add the cash flow return and that gives us a total of a 53% return. Now that's something that I can get excited about. But I can do better. I can turn this into an infinite return if I can borrow the $15,000 down payment from somewhere else. So with a 53% return, I've got options to where I can pull this money from. I mean, a hard money loan would work, even the most expensive of those. And that would be really easy to do. A private money, that would work for sure. Even a credit card would work easily. But here's what I did. For a couple of years now, I've been playing with this velocity of money concept to accelerate my wealth building, all the while mitigating my risk. Basically, I'm positioning my assets to buy assets that buy more assets. So in my world right now, it looks like this. I've been making small monthly deposits into a life insurance bank account. The money I put in there, it's invested in a conservative stock market something that averages about a 5% a year. So it's not a big deal. But it's fairly insulated against market volatility, so it's safe. And it's a strong 8-figure policy for my wife and son. So this special bank account, though, it possesses the unique ability to borrow against it. Meaning, I don't borrow the money that's in the account. No, it all stays there and grows at 5%. I borrow against it using the money in the account as collateral. And so about 18 months ago, right at the onset of the COVID lockdown, I borrowed against it to buy some Bitcoin. And if you've been cryptocurrency alert lately, that turned out to be a really good time to do that, as Bitcoin has grown about 1,000% since then. And then where I buy my crypto from, I have the same ability there to borrow against it in the exact same manner that I'm borrowing from my life insurance bank account. So I did. That's where I got my $15,000 down payment to close this deal. And now, since I officially have zero of my own money in the deal, the return can't be calculated. So it's an infinite return. Now, I know this may seem like a house of cards doing this daisy chain borrowing, but it's really not. Actually, quite the opposite. It creates a very strong financial foundation. And ultimately, what's happening here is I invested $1 in my life insurance bank account, of which bought $1 of Bitcoin, of which bought $1 of real estate. So that $1, when moved in this sequence, purchased $3 worth of assets. I still own $3 of assets that only cost me $1. And all of those assets continue to grow. This is what I call velocity investing. And if you'd like to see how this works and how it's structured to protect my portfolio and the services that I use to make it all happen, this is just one of the things that I'm getting together with this small group of investors this week to go over. So go to creativefinancingmasterclass.com to get all of the details. Now, where am I finding these types of deals and how am I contacting them? What I've been doing lately is just looking up property management websites in the markets where I already own property. So I take a look at these websites, I look at what properties they have for rent, and I just kind of make a note of the property addresses and then I go skip trace them. I then load them up to a simple marketing campaign that begins with a ringless voicemail. And that voicemail says something like, "Hi, this is Matt. I own property in the area and noticed you have one sitting vacant. I was wondering if you'd be open to an arrangement giving you the same net monthly income you'd expect to receive from your rents without the tenant and turnover headaches. I sent you a pink envelope with all the details. If you like what you see, give me a call. My number's inside." Now, this ringless voicemail alone will generate some phone calls. And then in the next day or two, when they receive my pink envelope, I get even more calls. I then text those who I haven't heard from, "Hi, it's Matt. Did you receive my pink envelope?" And that will generate even more calls too, which is resulting in a tripling of my response rate that my postcards alone were receiving. So that's how it went down, with no money down and an infinite return. So what did you notice? What did you learn? What did you find most valuable? Let me know below. I really would like to know. And who else do you know that needs to see this? When their name comes to mind, please share it with them. Oh, and if you are already subscribed, I pulled this video out right here special for you to watch next. Otherwise, I'll see you next time. Take care.